Okay, we're getting started. Please spot plus if you hear me well, if you see me. This is a new design of my video, as you see. Now I'm in a circle. People are coming. Okay, let's start. And the plan for today's meeting, for today's stream is the following. First of all, we will talk about the trading diary, about the mistakes the amateurs and beginners traders usually make. Then we will discuss the BTC, the Bitcoin potential, and the yesterday's news on BNB, on the Binance. What should we expect, and so on. And then I will show you the strategy of pullbacks from huge densities, from huge limit orders, and if you if it will be good enough for you, if it will be interesting, we will devote the next stream to this strategy. Somehow I can't see the chat. Don't know why. Just a second. Okay, let's getting started with the diary. I think this topic will be extremely useful for many traders, especially for those who are just starting. The diary is the really important element of your trading that should be pegged to your trading system. Why should you keep the diary? I will explain you in several moments. Let's just check, for example, any trade. But before we start, I would like you to pay attention to our chat, Syscap Traders, and why it's extremely important, because here you will be not alone with the market, and you will always get any assistance, support here. And I personally quite often try to put something useful here, to put some thoughts on the market, to put some setups on the market, as you see, and many people successfully work out these situations, and it's really I'm really happy of getting from them messages that they really appreciate this, and I'm really happy to hear this. As you see, we share some not only thoughts but different ideas on the market, and this chat works not only as a support, as a technical support, but as a kind of screener where our experts from Syscap share their thoughts and their situations, what they are looking for, what they are expecting from the market. Now, finally, I'm figuring out what's wrong with the chat and why I can't see your questions. Now I see your questions. Great. Now I see. Hello, happy to be here. I don't know yet how to react and read exactly order book. We have produced and published many videos about that, but if you have exact questions, you are welcome to ask, and I will try to answer. Okay, let's start from what I promised. Why keeping the diary is so important. Every trader, first of all, is a human being, and all we are emotional creatures. And many people ask us how to manage tilt, how to manage emotions, and we always keep answering that the best idea, the best instrument against tilt are following the trading system, using only comfortable volume and having a daily drawdown. But anyway, it's quite simple to say this, but it's much more difficult to adhere and follow all these instructions. And one of the best how to explain you, one of the best, I would say, tool or even a kind of custom that you should get used to is I totally forgot the word, sorry. Let's say everyday routine of keeping your diary after each trade. It will really help, it will change your trading, because every time you would like to gamble, every time you would like to make many trades under emotions, you will be thinking that you will be responsible for each trade, and each trade in your diary you will have to add a comment, add the description why you do it like this, and so on. That's why when your trading is pegged, absolutely pegged to this diary, if you systematically get used to the routine of every day keeping this diary, it will be too lazy for you to trade something uncertain, something really bad, or something dangerous. You will get used to finding only reliable setups, reliable situations with no noise, absolutely no noise. This is absolutely simple idea, and the main reason why we should use this diary. First of all, for example, let's take this trade. We just made this trade, CTK USDT, and every time we close it, we should go to the diary and add the reason. For example, it will be the zone or something like this. Let's say slope, pullback, and then we add a comment or a video and so on. Why it's useful? After some time, even if you have some loss, for example, during a week or during a whole month, the best indicator of changing of the market stage is your diary. Why? Because when we are trading, adhering to the trading system, and then something changes, we facing loss 1 week, second week, and so on. What we should do, we should stop trading or decrease the volumes to the minimal, and then we should analyze the diary. What has changed, or what has changed in our behavior? For example, what mistake I see here? There was trading of the zone. As you see, there was a buyer's small zone, a kind of order block. The entry to this trade was according to the graphical factor, the zone itself. I also selected this zone by the volumes. And finally, the problem was that this entry was too early. There was emotional decision and there was a mistake, and this trade, this entry spoiled the entry point, because when the price finally reaches this area where I managed to notice a huge limit order in order book, I had an opportunity to load all in, not all in, but I mean the full potential, my full working volume, 5x leverage. And what I should do, I conclude that next time I should be more patient with no such emotional decisions, just waiting for my entry point, because in a negative scenario, my stop loss that would probably should be there will bring me much more loss, because my first entry point was here. That was the infringement of trading system. Every trader is a human, and I am a person, I am as well a human being, and sometimes I infringe trading system, and this trading system should be in front of your working place to be sure that you will look through this. Finally, fortunately, the trade was quite good. There was the first fixation, then there was the robot that probably pulled limit orders in spread, trying to push the price higher. I made a decision to add into the profit, but there was a mistake, because the robot then disappeared. I made a decision to fix, and I fixed all the position here. After we analyze this trade, we should add a comment why we entered, even if this decision is emotionally driven. We add this comment. We should ideally insert an image, how we select this situation, and there will be great if you record all your trades and you have an opportunity to load the video of this trade. After analyzing several such trades, you will be sure that every trade will cost you not only your time to analyze all this, but to insert image, to insert video, to add a comment. It really takes a lot of time. And just imagine if you have 20 trades per day, absolutely unreliable, absolutely gambling. You should describe every trade from 20 trades. That's why it would sound quite strange, but the less trades you have per day, the more quality you can extract from this. Because personally, I would probably skip 8 out of 10 trades, but 2 other trades will be ideal and probably they will work out. And I'm not only save my deposit by skipping wrong trades, but I will increase my deposit by taking only those trades that absolutely correspond to my trading system. And this routine will learn you how to distinguish good trades from bad trades. Anyway, every trade should be like this. Add comment, we insert image and insert a video. I deleted all the comments because everything here was in Russian. That's okay. I think it's quite simple. I would really recommend you to keep your diary because every time it will help you to not only analyze your trades but to keep the statistics, and all these statistics will not say you, it will cry. It will say you very loud when something is wrong, when the market has changed or you infringing your trading system. You will figure it out just watching the cumulative delta, cumulative profit, or watching just the statistics, that something is wrong, that you should have to change something. Okay, we are getting further. Let's switch to the BTC as I promised. Just a moment. If you have some questions, please ask, because I'm here to help you to enhance your trading, and I will do my best to do this. Let's analyze the BTC, and I really want to make an emphasis on very important factors. Sorry. Yesterday, as you know, there was FOMC speaking. There were FOMC minutes, and the extremely important thing that almost, I think about half a year ago or 7 months ago, such news led to really drastic chainsaw on the market, really huge and volatile movements, because there wasn't the market expectations, and the market participants were not ready for such fluctuations. But now all this news and even negative news already included in the market, and nevertheless, despite all these facts, the BTC is keep growing. This is really good news. Another one really important factor. As you remember, yesterday there was a really noisy event that there was some court issue with the Binance, and there was a fine about. I'm not sure it's already approved, but I think the fine for Binance will be about $4 billion, and the BNB just dropped in 7% or 10%. It doesn't matter, but look at the BTC. The BTC is still in the range. It's the BTC and buyer's power of retail and the huge whales are so strong that despite all this news, within one day, the BTC withstood it like I don't know what analogy to to give you, but all these factors shows us that the BTC buying potential is really strong. Withstanding this news without fluctuations, even without being corrected to the lower sides, the lower strong levels, for me personally, means that the BTC is I don't know when it's going to the moon, but anyway, the BTC position is really strong, fundamentally strong. From the graphical point of view, from the point of view of the graphic technical analysis, we just see the local range, and it, of course, it looks like increasing of accumulating of power, accumulating of positions with liquidity grabs, and I'm almost sure that there will be something like this, and the new assault of 40,000. I'm almost sure. It's the question of time. Of course, I could be wrong, because I'm not a future predictor. All the traders usually are those people who are working with probabilities and operating with analytical factors and probabilities. In what time frame you suggest to find order blocks? Order blocks you can find at any time frames, but if you want to work out these order blocks like smart zones, I would recommend to find it on 5-minute time frame, because in this case the zones will be not so huge, and it means that your potential stop losses will not be so huge as well. The lower the time frame, logically, the shorter the stop loss, if we are talking about the zones. Now, what I really wanted to say you about the yesterday's movements on the BNB. Many people, as you see, sorry, I was wrong, 17% drop after the news, but anyway, 17% is not so dramatic. I really expected that there will be 30%, 40% of drop, because there was really noisy about the BNB issue, about Binance issue. But anyway, what I really want you to aware, when we have such news on the giants exchanges like FTX, if you remember, we always should stay away from our grid. What I mean? I mean that yesterday there were many liquidations on short movement of the BNB. Why? Because many people, many retail traders were sure that they are the smartest ones, that they are financial sharks, and they tried to short BNB all in. Why it was the greatest mistake? Because BNB is the strongest, is the token of one of the strongest exchange. Such strong exchange possess really strong market makers that really know their work. Market makers are those usually physical, usually people that appear in that act from the on the behalf of exchange, or maybe other project. You know that many people I think know how to detect the market makers. Maybe I will show you those who are shifting the liquidity to provide the fair trading on the current instrument. And what I saw yesterday, the market makers tried to hold the price from falling. Market makers through placing limit orders, through releasing really huge volumes by the market in different periods of times, just to how to say, to absorb all this power of shorting, of crowd that shorts. And of course, there will be really, really strong and very fast correction to opposite side, to long side, during which the aim of exchange market makers is just to protect the price of exchange token from this drastic sale, panic sale. So what they will be aiming to? They will be aiming to liquidate those retails who try to short their token. They are just protecting themselves. That's why they will be do everything just to make really drastic movements against you, just to grab your stop loss. Several times grabbing a stop loss will liquidate many people who are being driven by their fear, their greed, and so on. They were liquidated because they were sure, oh, now I will be rich because there will be a really great short movement like FTX last year, but it's quite ambiguous, as you see. And what is the conclusion from such situation? Trade only those setups that you can trade, that you have experienced in, and never try something dangerous right here and right now, something local, especially trying to load all in. That will lead you in 99%, it will lead you to liquidation or critical loss of your deposit. Please follow this advice. What we should do next, I forgot. I answer your questions. What do you think about TRB? Will it break the strong 93 resistance soon? From technical analysis point of view, let's watch. That's quite difficult to predict this because on the one hand we see the consolidation before the levels, below the levels that should be broken. I know what you mean. Some consolidation, some price compression to the level, and finally the classical breakout. But what I really don't like on this picture, I really don't like this, the contrast between the volume, vertical volume. We usually use and perceive vertical volumes as the instrument just to compare current activity with the previous activity. For example, it will say you nothing in just locally, but if you compare, for example, this area of the graph with this area of the graph, you see that there is decrease of volumes. The decrease of volumes, the consolidation, and now we can make a conclusion that this consolidation created and this consolidation is not the result of huge players and retail's desire to load the position to continue this movement, but it's just the local equilibrium between between demand and supply. Why? Because the interest is exiting this instrument, because the volumes are decreasing. They are becoming lower and lower and lower. What does it mean? It means that there are the amount of trades inside this consolidation are decreasing. But what do we need just to bring the really good impulse? It's the question for you. What do we need? The most important condition. Maybe someone will write the correct answer. I will wait for half a minute. What do we need for a really good impulse to break the level? To break, as you said, the resistance of 93. Okay. To break the resistance, increasing activity. Yes, Arthur, you are right, absolutely. So to break this structure, we should have the opposite situation with the volumes. We should have something like this. For that reason, I would say that there is nothing about the break of this structure, but anyway, you can overview this situation, because at any moment, at least we have a moderate daily volume. It's not too low, but it's not enough to break this level. It should be higher than $300 million per daily volume, and visually increased volumes here. In this case, yes, but not now. But thank you for your question anyway. Let's go further. I would like to show you one good trade by one of our students. The trades that really work now in the current market, you know that depending on different stages of market, different stages of activity, I would say. So we apply different strategies. And now I really like how the pullbacks from huge limit orders work. What do we see here? Here we see TRB instrument with the horizontal levels. The round price, as you see, that's really important. And as you see, it's not visible here, but the increase of activity, as we said, several touches to the level, and we are coming to the next touch. We are waiting for the breakout. Ideally, many traders, most experienced traders, could use both strategies in one situation. First, the breakout, they trade the breakout, and then the pullback from huge limit order. We see that the level of breakout is here, 127.9, as you see, from where we expect the breakout. And here we see the huge limit order. And the crowd psychology is the thing that that implies that many people expecting the same movement. They are trying to enter the same impulse, trying to fix before it reaches a really huge limit order, because there is a quite obvious risk that we will pull back from this. That's why we place our limit orders to fix, or we fix by the market somewhere here after the breakout. Why? Because here we have a huge resistance. There is a chance that we fail to break it, and this resistance will be too huge, and it will probably reverse the price. That's why what should we do? We see this level, it's quite strong level, and we see the huge resistance. We should be aware that this resistance, this limit order, will be huge enough to stop this price, to stop this impulse, and from this limit order there will be drastic pullback. We divide our working volume by 3 parts and placing the limit orders near this limit order. When our first limit order will be executed, when it's executed, we will place stop loss above this shelter. This strategy is good for one reason. The risk reward ratio. In the worst scenario, we lose, for example, $10 if this limit order is executed and our stop loss is activated. But in good scenario, we make, for example, $80. Let's watch the video. The volume is quite low because there was the trade of our student. This week I failed to record any trades because I was on small vacation. As you see, there was the 80% of this volume execution, but anyway, there was enough volume to reverse the price. When there is no further movement, all the people, all the participants who opened the same trade here, who participated in the breakout, started fixing here when they saw that, oh, we failed to break this limit order, we failed to execute it. Let's fix, and every fixation of long trader, of a buyer, it's in fact it's a sale. That's why the selling power then increases, as you see. And such trades are called the pullback from limit order, and you are welcome to ask your questions. The trade was really good, and don't be shy to trade with really minimal volume, because only in this case you will feel yourself comfortable within your trade, and this is the core and main rule and main condition to be very objective during your trade, not to make mistakes, not to rely on hope and so on. Because when the volume is wrong, for example, if your volume is exceeded, if you over exceed your leverage, usually it pushes you to wrong decisions, or you can either close and fix your profit too early, or trying to replace stop losses high and higher or low and lower, hoping for the best. It will ruin your deposits. That's why we should trade the comfortable volume. The comfortable volume is the volume that we are trading and can have several stop losses in a row with no emotional change. That's the core features of a comfortable volume. I personally, even me personally, I've been trading more than 5 years. Even me, sometimes when I see that something wrong with my trading, when I have several days in loss, I'm minimizing my volume up to $300, $500 per trade just to see what's wrong, just to accumulate and grab new statistics with a very low volume. And then if I manage to extract my mistakes, if I see my mistakes, if I finally get what's wrong, I am getting back to my working volume. It's extremely important. Don't be hurried to live from trading, to have really big money from trading. Everything will be if you follow all the rules, and first of all, risk management rules. Now I think it's clear because it's quite easy to understand concerning, I mean, this trade. And another one thing that I wanted to add is that we should be able to correctly set up the order book when we see this 9.7K contracts. The order book should be adhered and set up in such a way that this volume will be correctly stipulated as the really big, as you see in violet color. The way how we should fill the parameters and how we set up of this limit orders, we talked about this in previous stream, if I'm not mistaken. You can find it in translations, saved translations in Cscalp, and I really recommend you to master out this ability. This sorry, it's hard to find proper words in the evening. I think you don't get me wrong, and you should be able to have a good sense of order book and put up such a settings that all the really huge limit orders will be displayed as in such a way that you will be easy distinguish bad and unreliable limit order from the reliable, as you see. In this case, settings are correct. And with this, I think we are done for today. And now in 15 minutes left, let's try to analyze the market and try to find some setups to work out. Maybe let's try to find it there. The Cscalp, for example, Sol USDT. I think it has already worked out. That's the announce of our stream. For example, BTC. And another one piece of advice use only those setups that you really understand. And if you share the thoughts of a trader, an author of the setup, only in this case you should use this signal. That was my signal, and that was today's zone. I published it in the morning, and it worked out really good. As you see, for example, the zones work really good, and with my team, we during the last several months we trade almost only the zones. Let's watch how it worked out. Yes, this is what this was the first working out, as you see. But when we trade the zone, we consider only the first pullback from this zone. This is the buyer's zone. Not every range like this is the zone. Frankly speaking, we are selecting the zones like this very strictly by adjusting the volumes, by searching the volumes inside. And then there was the impulse, the exit from this zone, the break of structure, and then the price is coming back, and in this point we enter the pullback, and there was the trade itself. Only the first approach, but anyway it worked out several times, but it worked out 3 or 4 times, but it doesn't matter. It's quite risky. We are working out only the first approach. More than 1%, but I fixed about 1% of movement. Now let's watch another trades. Anyway, here you can find not only the setups, but all the latest updates on the market hot coins or interesting situations or something else. Some workouts of the situations and the setups. And usually the authors of the signals are only experienced traders. Unfortunately, there are no situations that I'm expecting for today. Everything that I was waiting for, I already worked out. And for now, the market is quite inactive, for at least for those that I am trading. Let's properly put the proper settings here. As you see, that's a really huge limit order here. Let's try to work this out. That's a first small position, but here I will add some, probably 5,000. Oh, sorry. I should change. I should change the leverage, but I can't show the soft from where I change the leverage. Okay, we'll try to work out this with a small volume. the round price and huge limit order of almost, let's calculate, it's about almost $3 million size here, but it's too far away from my entry point. I will add some position here. Increasing the volume. Graphically, it doesn't look like it's gonna be broken, this level. Oh, sorry. Wrong instrument. One of the potential scenario is something like this, with further breakout, but it's now still yet only 2 touches to the level. That's why we still can afford the pullback rather than breakout. Don't forget about the questions, or maybe you have some ideas for the next topics, for the next videos, or for the next stream. You're welcome to make your suggestions. I really hope that from this point that this participant will not cancel this limit order, and we will break these structures starting from this huge limit order and doing something like this. In case this participant cancels this limit order, I automatically cancels my trade. Because sometimes such limit orders only are placed for to manipulate the crowd, to make us opening long position from this limit order and accumulating stop losses like me here, as you see. Many stop losses here just to bring the really strong breakout on these stop losses. Anyway, I already don't like this situation because there is a compression of the price to the level and the increase of short activity. I would probably cancel these orders. What's happening in 1 minute? On 1 minute, it's gonna short. Especially on the background of negative news, what I'm doing now is quite dangerous. But anyway, my stop loss is really short. In case of a really huge activity, I would probably open short position in the execution of this limit order. So if you want to trade this setup as well, please be careful because the instrument could really go short by two factors on the basis of two factors. First of all, yesterday's negative scenario on BNB, negative news, and the formation itself. Like this, you see the limit order. I don't like this. This is the real resistance. And the formation itself really shows us that many people gonna short this, especially the huge limit order on the round price. So I think we're gonna finish this stream. Thank you for your activity and thank you for your questions. But it's time to finish.